the worst.
All right, good evening, everybody. Welcome to this evening's Board of Selectmen meeting. I'd like to start with a roll call, please. Selectman O'Connell here.
Garrett Palmer here.
Greg Bendel here.
Kevin Kyra here.
And Lily Maselli here. Thank you. If you would all stand and join me in the Pledge of Allegiance, please. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Okay, we do not have any transmitting of treasury warrants today, nor do we have any approval of minutes. So we will start with our appointments. The first one, this is a continuation of the public hearing opened at our last meeting on November 22nd. Karen Rassius, Principal Assessor, regarding the public hearing for the discussion of local property tax policy with reference to classification. And we will start with that. Good timing. Take your time. Good evening.
Madam Chair and members of the board for we are here this evening to present the fiscal year 22 data for the purposes of the tax classification in accordance with the Mass General Law, Chapter 40, Section 56. As stated in the cover letter that we had provided, the information that the Board of Selectmen will be presented is so that you may determine the percentages of the tax levy to be paid by each class of real and personal property for fiscal year 22. After the presentation, the board must vote on a residential factor, which will determine the percentages of the tax levy to be allocated and paid by the residential property owners. After careful analysis and review, the Board of Assessors' recommendation to the Board of Selectmen is a classification shift of 175%, which results in a minimum residential factor of 0.758743 for fiscal year 22. This shift conforms to the guidelines of Proposition 2.5 and is consistent with prior year's tax policies by the board. Adoption of this recommendation allows the town to assess and collect an equitable amount of taxes from the residential, commercial, industrial, and personal property sectors. This year, although it was not a recertification year, the assessments have to be updated annually, and they were to meet the Commissioner of Revenue standards and have been approved by the Department of Revenue. The proposed assessed values were established by analyzing calendar year 2020 sales and income data. Our analysis resulted in the average single-family residential property value increasing by approximately 7.18%. The average tax calculation is offered simply as a guideline. Some properties went up more, some properties would go down less, but that is an average. Individual tax bills may increase more or less than the imputed average. Traditionally, the Board of Selectmen have shifted the maximum allowable to the commercial, industrial, personal property class, and that's the recommendation of the Board of Assessors this evening. The Board of Assessors continues its mission to provide the most full and fair and uniform assessments and tax policies to the taxpayers of Wilmington and respectfully submits this recommendation to the Board of Selectmen. So let me further explain a little bit of the impact in the way we come to this conclusion.
Mm-hmm.
So this chart here shows what happened with property values. And this is, again, based on calendar year 2020 sales. So we've all 2021 is almost over, so we've all lived through 2021, knowing that the real estate market has been extremely hot and values have gone up substantially. But keeping in mind this was based on 2020, when we were in the middle of COVID. We had, in March, the market pretty much slowed down and stopped until the fall. So values went up 7.18%, which you may have expected it to be a little bit higher this year. But I think you're going to see that next year based on the 2021 sales. So our average residential value last year in 2021 was $3.8 billion. This year it rose to 4.1 billion, which is an 8.15% increase. That is the entire residential class, which is not the single-family residential class. So that 8.15% is different than the 7% that I mentioned. That's because condos, vacant land, apartments, et cetera, is all considered in the residential class. The commercial class, last year was 183 million, and it rose to 192 million, which was only a 4.5% increase, whereas our industrial class was at $837 million value, rose to $955 million value, which is a 14% increase. As you know, we have Wilmington's kind of positioned well through this time. We're not a big retail, hotel, mall type of a community where we have a lot of industrial warehouse flex type buildings, and those values have become very high demand with the Amazons and FedEx and UPSs of the world. So we have fared rather well, and those values have increased substantially this year. Personal property went from 157 million to 193 million. That's a $36 million increase, which we don't do the assessed value for personal property by account, but it's more that is to show the difference in the entire class of a 23% increase. And that is predominantly made up of a few large accounts. So we have Monogram Foods up on Ballardvale Street. When personal property business is considered manufacturing, they don't pay personal property tax, but when they are taxable, they do. And they reported a value of over $20 million in personal property that came online this year. So that accounts for a very large portion of that. Boston Gas also reported an additional $8.7 million. So when you're looking at such large individual companies investing in changing their tax status, this is the result. We also had Charles River Labs. Their value increased $1.7 million. We have a company called Shep USA. Theirs increased $4 million. So we don't really realize what's going on behind the scenes in all these commercial buildings that we have here, but they've continued to increase their assets and open new businesses that we have had here. So the total residential and commercial and personal property value last year had just tipped over the $5 billion mark. This year we're at $5.5 billion, which is an overall 9.47% increase. And I just want to point out here, as you can see, which this will lead to our next screen, we are predominantly a residential community. If we look at the next screen, you'll notice that the residential class actually makes up of 75.6615% of the total value. And the commercial, industrial, personal property class makes up the balance, which is 24.3385%. But when we shift, if you vote to shift the 175%, that results in the residential class only paying 57.4076% of the tax levy, and the commercial, industrial, personal property class paying 42.5924%. Our estimated tax levy this year, as you can see at the top, is $94,747,187, and that would leave us an excess levy capacity of $71,661. As stated down below, you can see with no shift, the residential class makes up the 75 and the CIP makes up the 24. If you do shift, it goes to the 57 and the 42%. And last year, the resulting shifts were 59% and 40.9% on the CIP. So the next chart is the impact of all of this. So if you did not vote, this is the impact on the average single-family home of voting a residential factor that would shift 175%. As you notice on the top line, if we did not shift and we had one tax rate for all classes of property, the tax rate would be $17.18, and the average single-family tax bill would increase $2,319.23 from last year, whereas the commercial class would decrease by $25,379. If you voted to shift just the minimum and go to 150% shift, the impact to the residential class would be the residential tax rate of $14.42 and the commercial industrial of $25.77, which would result in the average residential tax bill going up $819 and the average commercial tax bill going down $4,586. You can see that as the chart goes down, what we're recommending is the shift of 175%, which results in a tax rate of $13.03 for the residential class and $30.06 on the commercial class. And that would result in a $63.95 average single-family tax bill increase and an average commercial of $5,797. Remembering again, this is only an average. There are certain styles of homes, neighborhoods, classes of property that have gone up more than the 7% and some less than the 7%. So this is a pure average comparison from last year to this year of the $63. So the tax rate actually would be proposed to go down to 81 cents and on the residential class and down $1.37 on the commercial tax rate. However, the value increase for residential is 7.1%, commercial industrial 13.6%. And the average commercial tax bill would raise $57.97, and that's about an 8.6% increase, whereas the residential would be like a 0.9% increase. This shows you a little bit of a history of the average single-family tax bill. Those parts highlighted in red, this gives you a 22-year history of the rates and the average bills. The red are revaluation years, and you can see in 2016 is when the last time we had a full reval was 2021 because the law had changed between 16 and 21. Rather than every 3 years, it's every 5 years that the state actually physically comes in to do a certification, although we do need to update our values annually. So you can see the trend back in 2008 when the market, 2006, 7, 8, when the market was going up, and then when things slowed down, 2013 is when it actually went to the lowest average assessed value that we've had, and that was a value of $349,000. And since then, the market has continued to recover and go up, and where today the average assessed value is $543,000 and $543,440. I want to show you this on a graph. Sometimes a picture is worth 1,000 words. This is plotting the average single-family value from 2001 to 2022. And you can see the assessed values. Some people say they never go down. Well, they do go down because we do follow the market. And you can see with this trend. In 2001, it was a little flat, and then we went up to the high in 2008, and then the market started to come down to our lowest spot in 2013. And since then, we've been inching up. In some years, we've kind of increased a little bit more than others. But that leads us to today of an average assessed value of $543,000. So over a 9-year period, that's about a 56% increase in value. And if we compared today's average assessed value compared to what's just happened in 2021, we're low. Our values are going to be definitely going up again next year based upon the sales activity that's been taking place. So the next page gives you a history from 2003, what the board has voted for your percentage shift. And as you can see, you've always voted the 175% shift, except down in fiscal 2007. From 2004 to 2007, the law changed to allow cities and towns to shift more onto the commercial industrial class because residential values were increasing at a greater pace than the commercial industrial. So what was happening is those towns that had a split tax rate, the residential class was ending up absorbing much more of the tax levy than the commercial industrial. So they changed the formula and allowed cities and towns to push to the 200 to try to negate that and keep it at the same levels that it had been. So this year, let's look at last year, the 2021. Again, on the left-hand side, it shows that the residential value actually makes up, last year made up 76%, this year makes up 75%, 75.6615. And the commercial industrial personal this year makes up 24.3385%. And if we look at the column with the tax levy share, 2021, the residential share was 59.0216%, and this year is proposed at 57.4076%. And the commercial industrial last year paid 40.97% of the tax levy, and this year, with a shift of 175, they would be paying 42.60%. So just by nature of the shift, the residential class is being benefited because they're paying less of the tax levy. So the Board of Assessors would like to inform the Board of Selectmen that the fiscal year 22 tax excess levy capacity is approximately 71,661. The residential factor adopted by the board governs the percentage of the tax levy to be paid by the residential property owners. And if the Board of Selectmen votes a residential factor of 0.758743, resulting in a shift of the 175%, this would be the most favorable scenario for the residential taxpayer, and that is the recommendation of the Board of Assessors this evening. Does anyone have any questions?
Thank you, Karen. I'll open it up to the board for any questions or discussion.
Hi, Karen. Thank you,
Hi.
Madam Chair. Thank you, Karen, for this presentation. Good evening. If you could just go back 2 slides for me to the average single-family analysis.
Sure.
Thank you very much. I just wanted to say that I was pleased. I mean, obviously, no one likes to see their taxes go up, including the people at this table. But I was pleased to see that if I'm reading this chart correctly, we're going to be down $80 in terms of the increase from 21 to 22. Is that correct?
Yes.
Okay.
And you'll notice the last time that we had an increase that small was back in 2010.
2000.
So we've not had this low of an average tax bill increase since 2010. Back in 13, 14, 15, that was when the high school, when the override had just hit and come online too, so you can kind of see the trends on that.
Well, thank you very much for this. As I said, no one likes to see the taxes go up, but I look forward to supporting the Board of Assessors' recommendation. Try to do everything we can to shift the burden away from the residents, so thank you.
Thank you.
Karen, I just have a question, and I echo what Mr. Bendel said as well. I think this is great for the residents. Just out of curiosity, for where the commercial businesses are taking on more, is that a normal trend? Do we see that in most towns, this type of?
I have had the opportunity to speak with a few other communities, and it was interesting. Tewksbury's residential values were going up the same as ours. I think everyone is experiencing the same. Well, I can't say everyone. You know what? Depends upon the makeup of your community.
Sure.
So Wilmington is just, for this situation, we have been positioned well because of the type of commercial property that we have in town. We have a lot of flex warehouse space, Fordham Road,
Right.
Ballartville, Andover Street, Johnston. It's a down industrial way. We've had some very large sales, and there's a lot of attraction to those types of buildings. A lot of Bain Capital's been one of the big investors in that. They purchased like 10 or 12 properties in town, and so it's. I think I can't speak broad, across the board because
Sure.
it really depends upon the type of the other commercial properties that make up a community, but. This is typically what happens when a residential market will outpace a commercial market, and that's again why they had changed that legislation. And the town of Burlington had sent a memo to us asking us to support them if they were to propose that legislation again, because Burlington is made up of so much retail and office.
Right, right.
That their residents are gonna end up, when your commercial value starts coming down that much and the residential value is taking off, the whole dynamic of what percentage the residential class makes up compared to the commercial is gonna affect your shift and affect the tax rates and who's paying what share of the tax levy.
Sure.
So I guess I can't say universally that everyone is experiencing this, but we are, I think, fortunate
Yeah.
this year.
No, great, thank you, I appreciate that information.
Thank you very much for the presentation. I think you just are speaking to what I was just getting at in collecting my thoughts. First and foremost, I mean, since I've been involved, we've done the maximum tax shift. I've been out of it for a while and now back. Ever since I can remember, we've always shifted to the 1.75. It's very difficult to get away from that and then try and bring it back. So I think we need to be really careful with that, while being cognizant of not being a burden to businesses wanting to come to Wilmington because they perceive our business tax rates to be business prohibitive in terms of wanting to come to Wilmington to establish a business. In my opinion, I don't think we're at that point, but I would be interested in your feedback, if you've heard anything, through your business endeavors in town, if people have been dissuaded from coming to Wilmington over our tax rates. I haven't heard that.
I have not heard that. I have had the opportunity to speak with some of the sellers of these larger commercial properties that have sold the industrial properties, and I believe our location is key. And I have interviewed different companies when they when they're moving in. I have to go do a tenant fit up an inspection with them. I'm like, why are you moving here from Woburn? Like Woburn, you were right on 128. And they were like, well, the rent is a little bit lower here. And they're like, honestly, the few extra miles and the amount that our tax rate is higher commercial tax rate than some communities. This year it did go down, $1.37. However, to them it was a business decision, and I think location, and a lot of them are looking to expand, and Wilmington still had some space available, whereas they're growing out of space where they are and they can't expand, so here they can grow a little bit and pay a little bit less. They explain it kind of balances off. The taxes might be a little bit more, but the rent's a little bit less, so it was a business decision for location and growth.
Thank you. And then as I'm looking through here, it's clear that the tax rate has continued to go down for both, even though, the all areas or all aspects, residential, commercial, industrial, they're all experiencing growth, which is a good thing. And then when you're talking about the actual tax rate going from 1384 to 1303 and then 3143 to 3006, basically the difference in the increase in taxes is the fact that you're paying more per thousand because the valuation is going up. So the market is hot. It's been hot, it's continued to be hot. Listings in Wilmington now are safely, new construction is in the $1 million price point. That's the first time that I've seen just an influx of people coming in that are spending $1 million on a single family home in Wilmington. So it's kind of good news, bad news, because it's kind of alarming to some to think that we have properties that are selling for $1 million, but we do. We certainly have properties that are selling for less. The average cost to purchase a lot of land for new construction is exponentially more than it was 4 or 5, 10 years ago. So Wilmington, I think, is appreciating as a community even more than some other Massachusetts communities too. And because the complexion of the town is that we're primarily a bedroom community, I think we're going to continue to see this look and feel unless we shift the complexion of the town. And I don't really see that happening, other than meeting our 10%. I think we'll see those condos and apartment complexes pop up, but I don't see, that the complexion of Wilmington is drastically going to change, that this is going to change that much. Do you agree with that? Or how do you think that the whole warehouse phenomenon and Textron shifting some of the use of their space, how that might change this going forward?
So I appreciate your knowledge and involvement with the market so that you can attest to the fact of the residential values of where they've gone and how they've continued to increase in the $1 million values, the $1 million plus values, and people outbidding each other by over, $150,000 to outbid from an asking price. What I think is that well, just to discuss what's on the books and what I see, what we have currently, and Val could probably speak to some of this too, but Darby Lane, we have coming in for residential subdivision. So Green Meadow and McDonald's Road is pretty, well, McDonald Road has a few more houses, but Green Meadow and Murray Hill, those subdivisions have finished. So a lot of our new homes and growth in that area, I think Darby Lane's going to take over. And the one thing to keep in mind when I say that the residential class increased by a particular percentage, all these apartment buildings are considered residential. So people drive by and say it's a income producing property and it's an investment property, but goes into the residential pie here. So we have the two different ones going on right now. We have the condos on Lowell Street, and we're going to have the apartment buildings on Main Street. So depending upon where they're at as of June 30th, because that's our assessment date, all of that new growth in value will end up in the residential class. So the more and if residential values are going to go up substantially more next year, it's going to depend upon, I don't see anything huge in new construction in the industrial class right now, except Textron. There might be some up on Johnspin. The 613 Main Street's warehouse, but that was existing, so that's not new. And I guess it might depend upon what happens in the personal property class as well, because that's always an unknown for us. So I'm thinking next year might be a little bit different picture. I don't think when you're building industrial buildings, they don't happen. You can build a new house in like 3 months, 3-4 months.
Right.
And industrial buildings take much longer than that. The only thing analog, they will be coming on a little bit each year until they are with the TIF agreement that we had. So until that's fully on board, that'll add more money to the industrial class. So I think that might help be a balance. We do have some warehouse space on Eames Street that's being built right now, but they're not $20 million warehouses. Right. So, when you take 75% of the town and you increase that by, 7, 9, 10% increase, and then you have your commercial industrial class that really only makes up 24%, and that might increase 10, 15%. Next year might be a little bit different picture than what we're having this year. So that's kind of what I'm seeing. I don't know the scope of Textron, because at the moment their value will be reduced because they're tearing down buildings. And then next year we'll see where they're at with how much they get done between now and June 30th.
Right. So that'll make a difference, okay.
Yeah.
So that just kind of definitely is in line with what I was thinking was going to happen. It would be interesting to say, and I think it's important that it'll be interesting to see how valuations, when we certify values again, what they look like, because, being in the business personally, my highest offer over asking was $301,000 over asking, and we didn't get the house.
Wow.
We were outbid by $10,000.
Oh my goodness.
So that that wasn't in Wilmington, but it was in a neighboring community. So that is still happening. So I'll be interested to see in the next year to two how these assessed values look when they have mortgage and loans attached to properties that people clearly have potentially overpaid for.
That is very true, and I receive reports monthly from the Registry of Deeds, and they tell what the mortgage amount is versus what the sale price is. And I am scared to say that there are some people that are buying houses at 3 and 5% down, as opposed to 30% down or
Right.
or something. There are several that are doing 10, 15, some 20% down. But when you're buying $1 million house, you're not seeing that kind of a down payment. But you're seeing larger mortgages. So I am a little concerned too. I can say that since 2021 is almost over, we only have the month of December, and it was very strong. Can't predict what's going into 2022, but our job is to interpret what happened as opposed to predict. So interpreting what happened in 2021 is exactly like what you've said, and that's what we're seeing.
Well, thank you again. I feel confident in what's being proposed here, and I certainly will be endorsing the recommendation.
Thank you.
Mr. Baum?
I want to thank you and your team for the way you've set this up. It's very, it explains things pretty clearly. I just want to make sure I've got this clear that the increase we're seeing is just in the value of the homes today, correct? The increase we're seeing in the tax rate will be
For
just,
fiscal year '22, yeah, it's just, so
Fiscal year.
their January 1st tax bill will reflect this tax rate and the calculation based on the proposed values.
again, I thank you and I will be supporting this.
Mr. Carver, do you have any?
I'm
You
good. They answered all my questions. Thank you.
All right. Mr. Hall?
So to Selectman DePalmer's point, just to be clear, the first two bills that folks receive are estimated bills, based upon prior years. So the bill that will go out January 1st will incorporate what the board will be voting on this evening, so that it will true up, if you will, what the actual tax rate is for this current fiscal year. It is, I don't think we can overstate the fact, because I've received calls, and I think it's fair to say Karen has received calls after the bills go out. People will call about their tax bill, and again, the average is 64, but that is essentially a hypothetical. There are people who will receive a tax bill that will increase above $64. There are people whose tax bill will perhaps go up less than $64. So again, this is just a statistical average. It's, on the one hand, it's kind of a mixed blessing, I suppose, because if you're a homeowner, and obviously a home is typically the largest asset that people have, to have the appreciation that's being reflected here is a good thing. The flip side, of course, is the challenge that goes with that, which means that the tax bill is also going to go up by some measure, notwithstanding the fact that the tax rate is actually going down.
And to that point too, Jeff, people shouldn't expect to see a $5,000 or a $10,000 increase in value, when values, the deeds that we're getting in are 100 and 200,000 over the assessed value. And once again, we have standards with the Department of Revenue. Assessed value should equal market value, what you can sell the property for. It should be in that range. So that is.
Right, and again, to that point, all of these values that are developed over the course of the last many months ultimately get reviewed by individuals at the Department of Revenue. So it again, just to make sure that the viewing audience understands, there's certain parameters that the assessor and the Board of Assessors have to work within, and ultimately this information that, in terms of the values of these homes, is reviewed by the Department of Revenue. So it shouldn't be construed that these values are being developed in a random way. It's essentially based upon what sales were for that period of time.
Great. All right, great. So I'll open it up for any public comments at this time, if there are any. There are not. Okay. And we can open it up to the vote for the board. Is that correct? You're doing that now? Yep. Okay, I'd like to entertain a motion to approve the local property tax policy with reference to classification as presented by Karen. Do I have a motion?
Move.
Well, I'm
So
sorry.
this
Oh,
would
sorry.
be-
We need to vote the factor. So the
Right, so-
factor,
Oh, the fact, okay, sorry.
that's okay. So if,
I would suggest that the board consider a motion to approve of the classification shift of 1.75, which results in a minimum residential factor of 0.758743 for fiscal year 2022.
So moved.
Okay, do you have a second?
Second?
All in favor by roll call? Do you roll
Selectman
call?
O'Connell, yes.
Gary DePalma, yes?
Greg Bendel, yes?
Kevin Kyrie, yes.
Julia Maselli, yes. So moved.
thank you very much.
Thank you very
And
much.
again,
Have a good
thank
evening.
you for the meeting.
All right. All right. Thank you.
Thank you.
Take
Thank
care.
you.
All right, next we will go on to communications, which we have none. There are no further public comments. There's nobody here. Any,
Sorry.
Yes, I'm sorry.
Sorry to interrupt. Do we have to vote to close the public hearing?
Oh, yes.
oh, sorry, I didn't have that here. Okay, so I would entertain a motion to close the public hearing in regards to the tax classification.
So moved.
Do I have a second?
Second.
All in favor? Unanimous, public hearing has now closed. Thank you, Mr. Bendel.
Thank you.
Okay, so no communications, no public comments. Do we have any announcements? No announcements. Any new business? No new business. And we will move on to important dates.
So under important dates, between November 29th and December 3rd, we have curbside collection of yard waste. November 30th is the Senior Center Building Committee's next meeting, Town Hall, Room 9, 6 p.m. November 30th through the 5th, December 5th, Festival of Trees, virtual, can be seen by going to wilmington.org /events/festival-of-trees. Then on December 1st is a brush drop-off, Old Main Street, 8 a.m. to 2 p.m. December 3rd and 4th, the Festival of Trees, Villanova Hall, Middlesex Ave, 9 a.m. to 9 p.m. December 4th is a brush drop-off, Old Main Street, 9 a.m. to 4 p.m. December 4th, also tree lighting, Town Common, 4 p.m. to 7 p.m. December 5th, the Santa Parade, 9 a.m. to 5:30 p.m. December 5th is the Festival of Trees, Villanova Hall, Middlesex Ave, 9 a.m. to 12 noon. Then December 6th through December 10th, curbside collection of yard waste. December 9th, Finance Committee meeting, Town Hall, Room 9, 7 p.m. December 13th, Board of Selectmen's meeting, Town Hall, Room 9, 7 p.m. December 14th, Economic Development Committee, Town Hall, Auditorium, 6 p.m. Just one other date that didn't make it on our calendar here, but I just wanted to note it. Again, this was announced earlier by the Mass DOT, but there will be a virtual public hearing with regard to the Butters Row Bridge Replacement Project. That is scheduled for Wednesday, December 1st, 7 p.m. to 8 p.m., and you can attend by going to www.mass.gov /Mass DOT -highway -design -public -hearings. And there is also an opportunity to submit questions or comments. To do that, project inquiries or written statements and other exhibits regarding the proposed undertaking may be submitted to Carrie, C-A-R-R-I-E, Lavalley, P.E. Acting Chief Engineer, via email at dot.feedback.highway@state.ma.us or via U.S. mail to Suite 6340, 10 Park Plaza, Boston, MA 02116. This information will also be sent out electronically, so that is the only other date.
Madam Chair, if I may, through you to the town manager, is
Yep.
it possible to have that put on the town's website? Just because that was great information, but it was a lot for
Yeah.
people to describe at home.
Right, yes, yeah,
So
we'll,
if you can put that on the
do.
town government page, that would be helpful, please.
Okay.
Okay. All right, at this time, we do have 2 post-meeting executive sessions. And at this time, I would entertain a motion to enter executive session with a subcommittee of the Board of Selectmen for the purpose of conducting negotiations with non-union personnel, town manager, and upon conclusion of that executive session, to enter executive session with the entire Board of Selectmen for the purpose of discussing strategies with respect to negotiations with non-union personnel, town manager. Both sessions shall be in accordance with MGL Chapter 30A, Section 21A2, and that upon the conclusion of the final executive session, the board will adjourn the meeting. Do I have a motion?
So moved.
Do I have a second?
Second?
All right, roll call in favor, roll call, please.
Selectman O'Connell, yes?
Gary Palmer, yes?
Greg Bendel, yes?
Kevin Curry, yes?
William Maselli, yes. Thank you, everybody.